episode of Beating Alpha. This is episode 74, and this one is going to be very special for one reason, is because I have this incredible bio which is sitting in front of me, and you'll see in a few seconds how this man looks, and he will be able to tell you more about his background, his history, and how he's been able to accomplish all these things. But first of all, his name is Gary Lipsky. He's a managing partner of APT Capital Group, which buys opportunistic value-add B and C class properties. Gary has been a real estate investor since 2002 and has invested in over 1,700 units. Gary is a real estate financial modeling certified and has been a successful business operator for over 30 years. Gary co-hosts the podcast Passive Income through Multifamily Real Estate Asset Management Fridays. That's a big name, but I'm sure you're going to be able to find that on iTunes, so make sure go and subscribe to that. And the Asset Management Summit. That's another podcast that you should go and check it out. So welcome to the show, Gary. I really appreciate the time.
Yeah, thanks for having me.
Awesome. I think we're going to have some good time here. Again, you accomplish all these big things, and a lot of people who turn on this episode, they kind of a little bit envy, thinking like, oh my God, is it even possible? And probably this man is just, freak of the nature or something in those words, So, but can you talk about your beginnings and just tell people that you are not a freak of nature and that everybody can do this business, right?
It's funny, I look at others and see how much they accomplish, and I'm like, wow, I haven't done anything, So it's all, perspective, But yeah, I mean, I guess the secret sauce is that consistency. But I've always been an entrepreneur. When I grew up in New Jersey, and during the winters I shoveled driveways, and during the summer I detailed cars for some money. And so I started getting that kind of, how do you market? How do you put yourself out there? How do you, control your own destiny, And I opened a restaurant delivery service in college, modeled it after someone that was doing it very well in Boston. And we were quite successful, went back to school, set, other people up to run it. They ran it into the ground. But, I wish I had that vision like DoorDash or Postmates back then, because man, if I had grown it, like that would be quite successful. But I went from that to I was an independent producer on a few films, and that really got me to understand managing people and dealing with crisis, because when you're filming a movie, every day is like, you've got to make the day no matter what. You've got crises that come up, and that kind of trained me for running businesses through downturns, through COVID, whatever it may be, to be ready to deal with anything that comes up, because there's always surprises and you have to deal with it.
Yeah. Again, I just got a little bit confused, because I think a lot of people did too, but I mean, in a good way, is like, how did you go from restaurant management to creating movies?
Yeah. So, I minored, I didn't minor in film, but I was like one class short. I should have paid more attention to that. I had a family member in the film business, and I liked, the creative side and the business side of things. I liked the energy, the excitement. When I was in the restaurant delivery service, it was just delivery. It was just widgets, and it wasn't exciting. And I remember my entrepreneur teacher in college saying, "Do something that you love to do." And back then, you're young, you're like, I just want to make money. I don't care what I do. And quickly, having a team of delivering food got really boring. I mean, I like to eat, and I like food, but it was just a matter of more and more deliveries, and that grew old really fast. And so film is quite similar to real estate, as far as you've got the creative side when you're looking at a building and saying, what am I going to do to increase the value of it? Whether it's the paint, the exterior, the branding, whatever it is. and then doing the number side of things too, to make sure you're on budget, you're on track. So, I don't think anyone really would correlate the two, but it really, for me, I like having both sides of it. It excites me, it energizes me, and I'm just a passionate person, and that's gonna fuel me. So it's not work. I enjoy what I do, and so I don't mind doing the long hours and dealing with some of the things that you don't want to necessarily deal with at times.
Yeah, that is very interesting. I do understand. How is that similar? Because both of these things require for you, to be passionate about what you do, first of all. So that has to be there. But coming back to the movies, like, can you tell people what like the names of the movies that people maybe can go and watch and see what those movies were?
Yeah, probably the only one that they'll be able to find is Goose, and that starred Jennifer Tilly. I know Branford Marsalis
And
didn't use it.
that's 1999.
Oh, really? Yeah.
Yeah, and the other one is Crossfire.
Yep, Crossfire.
Lethal Justice also, yeah.
Yeah. So I mean,
Awesome.
these are like Lethal Justice. We made for, I don't know, 65,000. Crossfire we made for under $500,000, and then Goose was a bigger budget. That was like $2 million. But yeah, it's learn under fire and problem solve, and you've got a very small window to get everything done. And yeah, it was fun. It was exhausting, but it trained me well for everything that business aspects down the road.
That's exactly what I wanted to say, because from my perspective, and I think from some of the viewers' perspective, because some of you're still gonna get 1% of the people are gonna be like, how is that a business? But like, if you're saying like the budget is like 60K and you have to build a movie from that, and I'm sure there's a lot of moving pieces and there's a lot of creativity have to be involved. Like how do you allocate that 60 grand towards, like, what's the most important pieces that I have to allocate the capital to, and like how the time frame, like, oh my God, like there is a lot. So it's a solid business, like, building movies as far as I'm concerned. But again, it's everybody's views are different. But that's very interesting. I never knew. So thank you a lot for sharing that, with the people. So when it comes to real estate investing, I mean, that happened for you 18 years ago, 2002. So can you talk about your beginnings of, real estate investing, and how did you discover that, that place?
Yeah, it was, I had a daughter that was just born, and we're looking for our first house, but I did it differently than other people. It wasn't like, okay, this is going to be our forever house. We were looking for a value add house, something that, we can buy, fix it up, and bring value, and then, and then improve to another neighborhood, so little did I know that was going to play a role in my multifamily business down the road. But, we found a house, and, I had no money down. I was in debt at the time, but I was able to get a house. We converted the garage into an office, and we eventually opened up the kitchen, and so that gave me kind of perspective of working with contractors and implementing a value add phase, which I was able to use down the road. And then I leapfrogged that into a nicer house, and turned a previous house into a rental. So I started in, single family home rental. And then I was looking at some small multifamily for a while, and just never, it never worked out. I was in contract on something, but until I connected with Kyle Mitchell as a business partner, then our business kind of really took off, of having that trusted person to really leapfrog our business, quite honestly.
Well, okay. So can you talk about the importance of having the right partner? Because again, in this business, leverage and partnerships are kind of important deal. So is it the question again for the people who are brand new in the space and they want to get involved maybe into real estate investing or syndication, multifamily, like how much of that is a key piece for this business?
Oh, absolutely. Real estate is such a team sport. You just can't get deals done without partners because unless you do go real small ball, which is fine and people do really well. But for what I was looking for, you've got to have certain net worth, liquidity, experience with the lender if you're doing agency debt. So team is so important, and Kyle and I keep track of anyone that we talk to as far as where they could potentially fit. Are they an LP investor? Do they want to be a key principal? Are they a GP? And if they're a GP, how much money can they raise? What can they bring to the table? What's their net worth? What's their liquidity? But having a business partner, for us, it gave us confidence in our underwriting, to able to, share what we each saw and say, hey, is that what you're seeing? Or is it different? Sharing ideas. And it just really helps because there's a lot of people that will say no, quite honestly. We, on another deal of ours, we talked to a lot of different partners to bring on, and a bunch of them said no, and that happens. But we were able to get the deal done. The deal's performing, very well. It just for different people, they could be working on different things. So you need to have, a bunch of people that you can go to push things over the finish line.
Yeah, yeah. So the element in multifamily space, having a right team, the right partner is crucial, right? So can you talk about your experience again, meeting your partner? I mean, how do you create those life situations where you meet those people that become your business partners?
Yeah, so I go to a lot of conferences. Obviously, it's different now, but meetup. So I met Kyle at a meetup, um, probably almost 2 years ago, and we developed a relationship. And I was going to Phoenix, he was going to Phoenix, and we were looking at the same properties. So we said, why don't we go together? And so when you're leaving at 5 a.m. in the morning, driving out there, and coming back late at night, you're in a car, you see that this person has the same values or not, the same work ethic, how they look at things, how they treat people, and those are things that you can see over time. And we just felt a really good bond. We did 2 deals together from our own separate companies, and then in the last 6 months, we combined our 2 companies, after like a dating period,
Yeah, that is awesome. I love that story. So again, 1,700 units. That's a big number, to be on, and that's, I mean, it's a lot of years. 2002, the beginning, the journey of real estate investing. Like, what portion, what percent of those units are you a limited partner or you're a GP?
Yeah, the bulk are as an LP. So I started investing in other people's deals to kind of learn what they were doing right, what they were doing wrong, how they were looking at things. So we control 170 units right now, although we have something, we're working on a contract right now that would double that. Because we've been aggressively underwriting deals for quite a long time. But yeah, I just started investing in other people's deals, gaining experience, and then we were ready to go out on our own. So last May, we had our first deal at 1.7 million, and then our second deal we did was a little over 15 million. But so we jumped, we almost tenfold it because of the relationships that we built over time.
Yeah, yeah. Again, coming back to relationships, yeah, that's another piece that I would like to expand a little bit. But first of all, I just want to maybe come back to the point where you acquired that $1.7 million deal. Maybe you can talk about, because the first is the first. You know, the first one. I think it's always where it leaves the most memories. You know, at least for me, every time you do something the first time, it's the first one, right? So, can you talk about just running through back that deal? Like how many units are we talking about, where is it based, and the process that you went through to actually to find and close the deal?
Yeah, it's a 42 unit in Tucson, and you know, Kyle was actually going out with his wife at for that trip, and called all the brokers, and the broker just got the keys, so he was the first one to look at it. And that's actually how we got our second one too, is we were basically first to see it, and we got to jump on the underwriting. So that's so key,
Timing,
because
timing,
yeah,
yeah.
in the beginning you're not getting off market deals, so you better be, you know, first of the punch to see things. And if you like something, aggressively go after it. And that doesn't mean you can have conservative underwriting. It just means, you know, maybe you shorten the due diligence period, whatever it is for you to help, you know, separate yourself from someone else without, you know, jeopardizing your underwriting, you know, not to be too aggressive, because you don't, if you've never done it before, it's nerve-wracking. And no matter how many training classes or whatnot, you've got to be super conservative, because if you do well in your first one, it'll be no problem getting the second one. If you do well in your second one, it'll be no problem on your third. But that one screw up is gonna cost you, so you better not screw up, you know?
Yeah. Yeah, it's right. It's like, that's what I said exactly. The first one is kind of the most important, because it's just like riding a bike. Like once you learn, you know, again, there's always going to be some things along the way. It doesn't matter how many thousands of hundreds of thousands of units you might have. There's always a learning curve in this business, in any business. But the first one is the first one, right? So talking about the current like deal flow, maybe you can talk about like how many deals do you actually have in a pipeline? Because you're talking about doubling, again, going to 340 units in probably a short time frame. So like how many deals are you guys currently are looking at?
Ooh, it does go in ebbs and flows now. It's certainly picked up quite a bit, you know, but yeah, I mean, sometimes we might have 5 deals in the hopper that we're looking at. And we just, you know, rack and stack, and what's the most probability, what's the, you know, to close, and, or the least competition, or how can we get a jump if it's going to best and final. Because if it's going to best and final, you know, you're going to have a very, very low success rate. Because if someone's going to overbid, whether it's a 1031 or they just have cheaper access to money, whatever it is, you'll usually get beat. And if you win a best and final, sometimes you're like, ooh, did I overpay, you know? You know, so the deal that we currently have under contract, you know, some of these deals right now just take forever. So we thought we had it, then the seller didn't realize their prepayment penalty was much larger than they thought. So the deal kind of fell apart, and then they were okay with the assumption with a tremendous discount on the deal. So then it became back alive again. So we did the due diligence on Friday, and hopefully, and that was with access. So while we're working on the contract, we asked for due diligence because it's assumption, there's a lot of moving parts. So we wanted to get a head start on that. So hopefully we lock down the contract this week, and then you know, close it within the next 90 days.
Awesome, awesome. Which I'm sure is going to happen, and looking forward to seeing the deal, seeing the property, because I know we are both on Facebook, so I'm sure you're gonna show off the property. Which, again, the current deals, you know, look great. So can you talk? Because again, by the way it sounds, it seems like you guys have some deals coming into your pipeline. You're looking at some deals, but at the same time, you're seeing no to some of the properties. So maybe you can talk about your underwriting process and like what type of assets are you currently looking for?
Yes, B and C class, typically in Phoenix and Tucson. We have properties in both markets. We have a strong partner in our property management company. and our rehab team. So, and they're great markets to be in. So we really favor those markets. So sorry, circle back. What was that? Remind me the question again?
Yeah, it's just the underwriting process, what you guys are looking for, like, yeah.
So definitely value add. So we go to a property and look for things that we can do that sometimes will cost a lot of money and sometimes doesn't cost a lot of money. So like our first property, we fixed the exterior. Didn't cost a whole lot of money, but boy, we were able to jump rents, 50%, and the people stayed. So huge opportunity without costing a lot. As far as how we underwrite, so typically we'll underwrite to zero growth in the first year, even though rents are still going up in Phoenix and Tucson, but zero growth year one. Then year 2 and 3, we'll know that our value add has kicked in as far as maybe bringing rents up to market, doing some interior renovation, doing the exterior renovation. So it might be 10% growth year over year, but it might be 1% rent growth in year 2, maybe 2% rent growth in year 3, and then maybe 3% in year 4. And these are markets, mind you, that have been going up, 7-8% in rent growth. So you really have to know your market, because that won't apply in other markets. This is a market that we're shooting well below expectations of ours, of the market surveys we get, of other experts as well.
Yeah, does definitely make sense. Talking about again, because you're currently southwest, so are you planning to invest in southeast regions? Going down like Florida, Georgia, those markets in the future?
I do like those markets, and I've actually spent a vacation driving. We flew into Atlanta and did all the markets, North Carolina, all the way down to Florida. We drove all of it, went to some like great restaurants and whatnot, and spent some time with brokers. It's just really far to get to. And, we visit our properties a lot. It doesn't mean I won't invest in those properties. I need a guy or a woman that's boots on the ground and happy to do that. But right now, we've been focused on the areas that we can get to quickly and consistently. So we'll see. But yeah, that whole southwest east corridor is just that migration of population is driving higher rents. The need for more multifamily, the construction is not keeping up. So that's where I want to be investing in.
Yeah. Oh yeah, a lot of people, again, if you already know the trend, but it's just for the people who are brand new. I mean, I'm not from States, so maybe you can tell the story, better than I do, because you're from there and you're the insider in this game. But there's a trend of people moving south, because of the baby boomers. Again, there's a lot of people, and the young generation, there's a lot of people like my age or, younger, they just want to rent, everything. When it comes to apartments, houses, if they can rent clothes, probably they're going to do that in the future as well. And I'm sure there's companies already doing that also. But, talking about financing, I'm sure it changed a little bit from 2002 until this current moment. But can you talk a little bit about the financial, how do you finance your deals? What terms are you getting, and how is this process working for your business?
Yeah, so there's multiple pieces of the equity stack. You can, as a syndicator, you can just go with debt from a lender, and it could be agency debt, it could be a bank, and those rates change. Right now, they're super low, and that's creating that COVID discount. The sellers aren't giving a discount, but because of the bank rate, the interest rate is so low, that really helps you. Particularly with these interest-only loans that'll drive up cash on cash that your investors want to see. So that helps a lot. Then you can have mezz debt, you can have preferred equity, and then your limited partners, your common equity. As a syndicator, we have a lot of people that want to invest with us through common equity, and that could be, like a 70-30 split, maybe an 8 pref. And so they'll see 8% on their money and get all their money back before we get to a split, before the syndicators really make any money. And we don't tack on fees, but everyone's a little different. Some people will have a disposition fee or a refinance fee, so people have to read their legal documents when you invest in someone's deal to make sure you fully understand. And it's long and it's tedious, but it's so important to, because I see a ton of deals that come across my desk from other people, and, everything is rosy and it's 18% IRR, 19%. But if you really look at the numbers, that 14% deal could be a lot better than the 19% deal. Have they run other businesses before? How much experience? What are the fees? What are the splits? So there's a lot of different things that you've got to be paying attention to. And I think people come back to us because we're pretty, straightforward and transparent with everything that we do.
Yeah, exactly. Because this business is definitely based on the relationships. And again, there's a lot of different syndicators. Again, as you said, they're, giving kind of similar terms, let's say 6% return, 15% IRR, and 3x multiple in 5 years, whatever that might be. You can find the same terms, in different, LLCs and different operators. But again, the relationship piece is you cannot buy that, and that's why it's important in this business. So maybe you can talk about, a networking piece and how do you build those relationships? Again, this is a question for the people who want to get involved. Again, if they're looking to raise capital, from accredited, sophisticated investors, how do you build those quality relationships? Where do you start?
Yeah, obviously it's a little harder now with COVID, so you're not getting out as much, but going to conferences, being around like-minded people is energizing, and you're trading business cards, or you're sharing information, and then you've got to continue to cultivate that, follow up, emails, newsletters, calls, to really get to know someone. And it's not just a cursory, hey, I'm going to go out and collect as many business cards as I can. You're much better off going much deeper in your conversations versus wider, and you walk away with 10 good contacts versus 100 not so good contacts. You're much better off with that, with those 10,
Mm-hmm.
And you have to build a brand, and that took a while for me to get comfortable with. Quite honestly, I wasn't a big social media person. I don't love talking about myself, but you've got to share what you're doing, and I have the ability to make people a lot of money by sharing what I do. So that's like the tack that you've got to take, and it's not, you're not pitching someone, you're just saying, hey, I'm doing real estate, I'm checking out some properties, we've done really well, this is how it works, and explaining it to people, because a lot of people don't understand it. They think they understand the stock market, and I don't know if anyone understands the stock market, but
even the guys on the Wall Street probably still don't understand it.
Yeah. But, here there's no hard asset that you have. There's constant fluctuations. There's no tax benefits. So talking about real estate is an easy sell, to people. But it's funny. I know so many people that just won't touch it, but they'll go into the stock market. But, certainly I've got enough people that I know that do want to invest in real estate and realize all the benefits. So they always can't wait for the next deal. And, when we, I hate saying, hey, we just don't have something now because of our conservative underwriting. We just got to wait and wait and wait. And, you've got people calling you and say, hey, I got 300,000 in the place. What do you got? I'm like, well, I'm close to something, but we're not there yet. So, I'll call you when we get a little closer. But it's hard having those conversations, people wanting to invest, and you got to be like, I just don't I just don't have anything right now. I'm trying.
Yeah, yeah. Oh yeah, okay. You know, like during these times, I hear a lot of investors like yourself talking about that it's harder to find deals. Again, the financing is available. I mean, it's never the perfect situation. It's either going to have insane amount of deal flow coming in, and you know the financing is going to be the hard piece, or the vice versa. So that's the way the market works. But what you said about the stock market again is, you know, a lot of people, as I said, you know, they think that they might understand what's going on, but as I said, you know, I don't think that these guys don't even understand themselves, because do what's going on in financial industries, because technology is getting involved, and you know, machine learning trading. I mean, where you can trade, you know, thousands of different assets in multiple, you know, multiple places, like at the same time with the machine trading. I mean, how are you going to beat that? And how are you going to find out like what you're investing your money in? Where, you know, in real estate, you actually can go and like, there's a brick, you can touch it. There's a roof, there's people who paying the rent, and they're working, you know, in these jobs. So you can actually feel it, see and feel it. So that's a
Yeah.
completely different game. And a lot of, you know, rich people, you know, started that long time ago, 100 years ago. So it's still, you know, it still works. So talking again, your experience, just want to ask you, what is a real estate financial modeling certified? Like, what is that?
So I took a class on all these different formulas and how to underwrite deals, um, and build it out yourself. Now I didn't necessarily need to know how to build it out, but I wanted to know how to do the different calculations. And we've kind of bastardized a couple different underwriting tools to create our own. And it's been really helpful. And each time we do a deal, we're like, oh, what if it can do this? And what if it could do that? And so, frankly, we've just hired out other people to do it for us at this point, you know, because so that I can focus on the higher level stuff. But that gave me kind of a good baseline when I started out on underwriting deals and wanted to really understand the mechanics behind what goes into it.
Mm-hmm. Yeah,
You know,
yeah.
to give me that experience.
Yeah, awesome. Love it. So can you talk about a little bit of your experience again, but not your maybe personal experience, but you know, experience of having, you know, management? Like, do you have an in-house management, or do you, you know, hire somebody to do that for you? And what is the process behind, you know, hiring that professional, best ever possible, you know, management company for your own real estate business?
Yeah, so we do use a third-party property management company. They're a very large company in Phoenix and Tucson, and so we weren't we were worried that they were actually too big for us, you know, that we could potentially be a number. But we quickly found out that we weren't going to be, and so we started doing more things with them. But yeah, we interviewed a lot of different companies, and we would bring them out and have them do their own pro forma. And depending upon how they did their pro forma, really helped us kind of gauge, you know, where they're at. And so we had one company that we had spent a lot of time with that kind of mailed in one of their pro formas. And it's such a critical piece for us to know, you know, where they think we can get the rents to, you know, understanding the comps, and we do our best to understand that, but we're relying on their sub-market experience, and that kind of lost the deal for one of the property management companies we were looking at, because they just didn't do a good job. And so we said, hey, we're not going to continue potentially working with you. So they, you know, once we hired this bigger company, and they do a phenomenal job, but they do have a lot of properties that they manage. So, you know, we had to set up our own systems to manage them as well, to, you know, trust but verify, to push them and see things, and you know, they would see, okay, here's the one number, let's say rent collection and leases, and we would say, well, there's all these other numbers that you should be looking at, like how many people are coming in for appointments, and how many submit lease applications, and how many do we convert to actual leases? And we broke down a lot of different statistics for them, and they were able to see, you know, how they can improve on those different facets and understand what needs to happen. And the results we're getting are significantly improved, because, you know, if you're at, let's say, 92% economic occupancy, but you can push it to 93, to 94, to 95, that's all pure profit. You know, you're already paying for your advertising, your labor, you know, all your big chunks of expenses. So, you know, a slight tweak could mean a huge return on your money. You know, $5,000 increase in net operating income a month is $60,000 over a year. You know, multiply that by, let's say, you know, a cap rate. Okay, so I'll run the math real quickly. So 60,000 at a, let's say, a 6% cap rate. Oops, I did the math wrong. You know, that's $1 million right there that you've added value to your property. So little tweaks have a huge result on your on the value and when you go to resell. So that's where we kind of focus in on, and we spend a lot of time asset managing our property. It's not something like, oh, we got a property, we're on to the next one. I mean, we're always looking for more deals, but, you know, we have our weekly meeting, and, you know, we go through all the stats, and we're constantly looking for ways to improve. Constant improvement cycle.
Awesome. Love it. Great. So talking about your property management, and again, talking about the upcoming week, which is the 1st, and the 3rd, that means the rent is due, right? So can you talk about, again, your property management, again, during these COVID, you know, times? Like, how is your current management, you know, property management company handles all the rent collections, and like, how do you handle those situations where basically you have tenants that can, you know, don't have a job anymore, and they can't pay, you know, like, how do you handle those type of situations during these times?
Yeah, you have to be empathetic. It's not just about, you know, on our end, not just about money. We've probably upped our communication with our residents, you know, fourfold, you know, providing a ton of resources, checking in on them. Do they have everything they need? Are they healthy? You know, everyone is dealing with their own set of problems. You know, obviously our utility bills have gone through the roof because of, you know, everyone's staying home, so water bill and other things. But yeah, you've got to work with your residents. You know, what we did also is we let them use their deposit money to help pay for the rent. You know, as long as they're communicating to us and working with us, then yeah, we'd love to keep them for the long term. It's the people that do not communicate with us at all, it's a struggle we're taking advantage of, it's a struggle with. You know, have that open communication, that dialogue, telling us what your situation is, how can we help, and we'll work on a payment system, whatever they need, so that they can get back on their feet and they have the resources. And thankfully, you know, the local city is providing some grants and services as well.
Yeah. So talking about the bills, like you mentioned now, the bills for the water, for the gas are higher. So do you have RUBS in place, you know, in some of your properties as well?
Do we have what in place?
RUBS.
Yeah.
You have
But
that.
so obviously you never collect everything that that you're charged, you know, unless you have a bill back system. But we have a flat fee each month. So yeah, we're taking the hit on that. We're not collecting late fees. We're not collecting other certain fees. So our income has gone down. We've been in the positive for our properties, and actually we've had some of our best months during COVID, quite honestly. But yeah, I mean, if it was under normal times, our income would be much higher. But Yeah, we recently just did a market survey too, and found that our competitors have raised their rub. So we just on new residents, we pushed it up a little bit, $10 a unit. But again, that adds up over time, you know.
Yeah, yeah. Oh, yeah, definitely. So again, talking about the business, I wanted to ask you a question about scaling, but probably we'll leave that at the beginning because this is you know, a fun topic to talk about. But like marketing piece again, because you're doing syndication deals and you know getting accredited, sophisticated investors, capital who are investing into your deals and the future deals. So like when it comes to the marketing and branding yourself, like what approach do you guys are taking? Because again, you have the podcast, you have that going. I've seen again, we met through Facebook, so I understand using that also. But is there any different approaches that you guys are using that will be, I think, useful for people who are looking to get started also?
Yeah, I think have some kind of platform and get comfortable with it and start somewhere. So for me, I started with a meetup, and we brought on some, you know, we had Rod Cleve come out, AAA Adams, and then I was sharing how I underwrote deals, and just people really got a lot of value out of that, and so it grew. So now we have an LA, downtown LA meetup, and then a Phoenix meetup that Kyle and I run as well. So that helped, and the podcast helps, and you know, now we're running a virtual asset management summit conference. We've got Neil Bawa speaking, Brad Sumrock, Jay Scott, Eric Upchurch, Danny Randazzo, you know why. So we got a great.
So when is that coming out?
It's actually running right now. So we started yesterday, September 21st, and it's for 2 weeks. It's a few hours every single day for 2 weeks, and it's free to register.
There you go. So people still can register for that right now, even though it's running.
Yeah.
Okay, so we make sure that we put a link to that.
2020.com, but I'm not sure when this podcast is coming out, so it might be over.
No, it's going to be coming. We're going to make sure that it's coming as soon as possible because people need to be involved in what you guys are doing. And again, if the event already started yesterday, we still have time. So we're going to make sure that this is going to air out. And I'm sure, again, people who are watching this right now, they already registered for that. So good. Yeah. So good. So what do you guys are planning to accomplish? Again, as I said, you know, scaling, and 2020 is kind of interesting year, but you're still looking to double your assets under management this year. Look in 2021, or maybe, you know, 5 years ahead projection. Maybe it's too long for you, but I don't know. But maybe you can answer that question. Like, where are you planning to put your business and yourself in a position when it comes to real estate assets? Like, let's say, you know, next year.
Yeah. So, I mean, we hope to, you know, we're working with a business partner right now, and if it works great, if it works out in this deal, then we can really scale up because they can bring a significant amount of capital to the deals that we're looking at. And actually, I was just talking to them before our recording, and I mean, we hope to do 50, 100 million next year and continue that path over the next few years. But the deals have to make sense. We're not going to do deals that just to do deals because that's a surefire way to be out of business and you know, very quickly. So it's about long-term sustainability and working with the right people, good people that you can trust and are easy to work with, and continue to grow that way. Awesome. So we have big aspirations, and we need to build out our team as well.
Yeah, that's good to hear. So again, for people who are looking to get involved into real estate or looking to invest, again, from the passive side, before we're gonna, you know, close this part, can you tell people, like, what does it take for them to invest? Because I know there's going to be some people who are watching and thinking, look, I don't want the headaches of the, you know, toilets, tenants, and, you know, all these problems that people are talking about, you know, when they acquire, you know, 4-unit properties or 10-unit, you know, deals. So what does it take for somebody to invest in your deals from a passive standpoint?
Yeah, for us, we typically ask for a $50,000 minimum. You can use a self-directed IRA or a solo 401k, or you can use cash. We look to basically double their money over the 5-year hold. Every deal is a little different, but you we also want to make sure that they understand all the risks involved as well. There's a tremendous amount of benefits, and we minimize it as much as possible. But we always look at, okay, what are the things that could go wrong, potentially, and you've got to be able to weigh all those factors. But yeah, I mean, people can, I'll share my contact information later, but they can, reach out to me. We have an investor form on our website that people can fill out. And, we like to have a conversation before they can invest. And that's part of the 506B regulations, to have a significant relationship beforehand. So they get to understand us, and we get to understand, their investing needs and goals, so that we can be aligned and make sure. And if we're not aligned, then hey, I mean, there's other people that I can direct them to if they're looking for certain things.
Awesome. I love that. So, for talking about that, connecting with yourself, like what will be the best platforms for people to get a hold of you?
Yeah, absolutely. I'm on Facebook. I'm on Instagram and LinkedIn. Gary Lipsky, just look me up. My email is glipsky, Lipsky, at aptcapitalgroup.com. And you can book a Calendly session with me if you wanted to have a quick call. We have a free ebook on our website. If you go to that, www.aptcapitalgroup.com.
Awesome. Love it. So I couldn't find the ebook, for now, because it will take me a few minutes probably to do that, to go to the website. But of course, all the links for you guys are going to be down below, so you can go and check it out, the free resources. And as always, I would love for you to get in contact with Gary. Just ask questions about what does it take to invest in those deals, because there is a lot of people facing a lot of financial difficulties right now. But even though some people are like I would say, in the place where they still have some capital available to invest, and they know that they should be looking to invest somewhere, because again, the job is getting, more and more uncertain. Is like, is it going to happen? Like, are we going to open, or, what's going to happen in the future? Again, technology is here. So there's a lot of people looking for other ways, not even to protect their capital, but to grow it over time, or just to have an additional income stream. So definitely recommend to connect with Gary, and ask all those questions. But for you, Gary, I really enjoyed the episode. It's been a good fun. Again, with your experience from, restaurants, creating movies, and then going into real estate, which is, again, both, as I said, both things require you to be passionate, which, as I see, you're really passionate about what you do, and you guys are growing your portfolio, which is awesome, even though the times are a little bit tough, for a lot of people. So that's good. And you're, at the same time, you're helping a lot of people to preserve and grow their capital and their wealth. So it's been a true pleasure to get to know you today. For you guys who are watching this episode and you think this was a valuable piece of content, just one thing that I wanted to ask you, just to go and share that with your friend, the one who might be interested into investing into real estate actively, passively, want to learn more about, multifamily syndication, what does it take for them to start this business. Share this piece of content, and that's all it is. And guys, as always, I'm going to see you in the next episode.